The stock market crash of 1929 was a devastating event. But before we get into the specifications, what is the stock market? The stock exchange is nothing more than a giant global network which keeps track of the marketplace where huge sums of money are moved back and forth. But what is sold on the stock market? As crazy as it sounds, the only product sold is securities, which are rights to assets, commonly in the form of shares. A share is nothing more than a part of the company, and according to the background of a company, the value of its share is stated. For example, as a company grows bigger and better, so do the shares. This can be a good thing for shareholders. If a share makes profit, it's a good sign, but if the opposite happens, then that's not the case. But what do companies gain from this? It helps raise funds by selling their shares and investing those funds to further expansion. But sadly, this is a game of chance. No one knows how a company will perform, so it's up to the investors whether to back it up or not. Usually companies with good ideas and good reputation are the ones who get invested, whereas companies with poor reputation and performance tend not to. Now that we know the basics, let's start from the beginning. It is 1918, just 4 years after the First World War was over. America is one of the victors and has also entered a period of prosperity and cultural change, the Roaring Twenties. Everything seems great, the economy has a great start, unfinished projects such as constructions have started up again, and most importantly, women have started entering the workforce, meaning more money to be spent. And companies want a piece of that extra money going around. In 1920, we see the first radio advertisement, which seems to be working, as tech and house appliances are on the rise. Now that the economy is doing well, the banks are giving out loans to everybody. As a result, people can buy the latest inventions and even a car, Henry Ford's T model to be exact. Everyone owns everything they could wish for, and they have started piling up their money. People have now started a quest for things to buy, and there is one particular thing that amazes the crowds: investing. Everyone joined the stock market thinking it was a money-making machine. And with so much money being invested, investors are finding it quite easy to make money on stocks. Everyone is trading all of their money and pouring their life savings on the top securities. This was so profitable at the time that everyone started getting loans to invest even more, and the banks are collecting the interest. Those banks are also investing more and more money, and soon enough they begin borrowing money from customers' bank accounts to invest more in stocks. And overall, financially, everything is going great. By 1929, America's total wealth has doubled, and investments are up to 218% since 1922. In fact, stocks are rising so fast, companies are finding it hard to keep up and set their stock prices, and that is not a good sign. Production seems to be slowing, and people aren't buying as many things as they used to. It seems that companies have overestimated their growth, and now wages are dropping. And all the loans that have been taken out are quite a handful. The worst part is, interest rates are getting higher by the minute. The weird thing is that the stock market is still up despite all the economical problems. And this is because investors are ignoring these problems and are buying more and more stocks. As investors are getting uncertain about investing, October 24th has arrived, also known as Black Thursday. It is said that this was the start of the Great Depression. Everyone was traumatized with headlines reading that prices of stocks crash in heavy liquidation. As the stock market opens, everyone starts to sell, 12.9 million shares to be exact, and by the opening, the stock market had dropped by 11%. There are so many people selling that it's almost impossible for tickers to keep up and come up with a selling price. With everything going on, the stock market is getting dragged down. Alongside comes a big part of America's wealth. October 29th, Black Tuesday. The Dow Jones Market Index has fallen by 12% and 16.4 million shares are sold. The market lost $14 billion in just one day. Many shares are worthless. People have lost their life savings, and anyone that is filled with debt is crushed. All this resulted to the Great Depression. It is said to be the worst economic downturn in the American history. The Dow Jones kept falling for another 3 years after losing a total of 90% of its value from its high in 1929. Many are losing their jobs and companies are starting to close. A big part of the money the bank borrowed from their customers to invest was lost. People are only getting back 10 cents for every dollar, and banks are shutting down across America. Unemployment reaches the highest level in the US history, 24.9%. This keeps going on until 1933, where the economy restabilizes again. It is quite clear how everything started. And ironically, the main problem was overproduction. Factories and farms were producing more goods than the people could afford, meaning the supply was way higher than the demand. This happened due to the successful start those manufacturers had. But the mistake they made was not taking into consideration what was to come. They were thinking short term and not long term. Another reason was the end of World War I, and people were trying to steer away from conflict and problems, making them reckless and unthoughtful. And with all of that in mind, if we can be more considerate of our actions, pay more detail to the facts, we could easily avoid anything similar from happening in the future.